Hey everyone, welcome to another video. I'm very excited to get in on this topic. This is something that I've recently been working out on myself, and what I did is I created a new channel in my Discord group focusing on reading price action. This topic is one of the topics that I covered in there a day ago, and I already pre-recorded a very simple video explaining this, but this video is going to go more in depth on that specific topic. So the idea behind this video is going to be teaching you how to get the highest probability supply and demand zones, right? A lot of times we are marking out one specific candle, and the idea behind that is, while that's wonderful and that's great and it works, a lot of times we're caught waiting for a point of interest that never gets tapped. And I've already made a video about missing point of interests, right? But this is going to go one step further and teaching you how to identify where you can expect it to be. And so this is going to take one of the basic rules that maybe you already understand of when the break of structure actually happens. This is combining change of character, break of structure, and supply and demand ranges to be able to really pin down where the best, highest probability point of interest is going to be. So this is not going to be a supply and demand video like all the other ones that you've been watching. It's a little bit of a combination of these things. Now, if you want to see more videos like this before they get on YouTube, go ahead and click on my Discord link. It'll be in the description. It's forever free. So let's get into this video. So first things first, where's the highest probability supply and demand range or zone? The range that gets mitigated will not always be the highest. For example, like we have this buy to sell here. Will not always be the highest. It will be the strongest range where the most volume is injected by institutions. Naturally, we can find this zone to be the one that gives the first body break and closure of the last buy to sell or sell to buy range, right? The highest probability point of interest that gets mitigated will be where the most volume enters the market. It will be a buy to sell engulfing or sell to buy engulfing that directly breaks structure. However, it can be any strong point of interest inside this supply or demand range. And they may be most visible on lower time frames, right? So in this video, this is kind of the idea behind this. If we look at these three examples at the top, the idea behind this is what we have is, let's say, a demand zone that creates a new high. In this case, almost all of the examples we're going to be going over will be supply zones, and that's just because the market in general is pretty bearish overall across the board on major pairs and on the Dow. And so that's the examples we're really going with. I like to use recent price action because if I really go back to find like the best case scenario textbook examples, it's not going to be very relatable to what's actually happening, and you might have trouble applying this in your own method, in your own strategy, because if I'm finding perfect price action, it's really not going to look like that all the time. So we're trying to use the most recent data possible. So here we have a low. Let's say this would be, for example, like a higher low. We make a higher high, then we have a higher low and a higher high. So this demand formed the most recent high. And so there's a demand zone in here in this range. This is sell to buy that makes a high, right? And so the idea behind this is what we're looking for is where's the last extreme. It's from the extreme of the demand that formed the high, where we get an actual break of this extreme by a candle body. Now, a lot of people will say if you don't get a break, immediately look for the next candle, and if you do get a candle body break below, then it counts, right? This is going to be different. In this case, unless you get a body break from that extreme, it doesn't count, right? So in this case, if we had a body break below, perfect. This would be our supply zone or supply range, right? Now here's another example, right? We have a higher low, right? We have a higher high, a higher low, and we form a higher high. Price then pulls back, gives a little attempt to make a new high. It fails to make that new high, right? And then we get a break to the downside. And let's say we get a candle body breaking closure below here, right? It can be at this, but it has to break below the previous low extreme, right, of the demand. So this demand formed the high, right? There was no more demand that formed a new high because this was a failed attempt to make a new high. So when this gets a candle body breaking closure, then we'll consider this to be the range, right? Now let's say we look at another example. Here we have a little bit more, let's say, realistic price action. right? So we form this high. So we have what? A higher low, higher high. We're giving a pullback, right? Here we have the extreme of a demand, right? This is the lowest point in the pullback that forms this high, right? Then we have another, what? Higher low, and then this is the higher high. So technically, this is the extreme that forms a extreme of the pullback that forms a high. This is also an extreme of a pullback that formed a high. So in this case, for example, price then shifts bearish. Let's say this is like a flip scenario, but let's say through here we have a wick, right? So this is broken by a wick and not by a body. Then this is not going to be the supply zone that we're looking for. We wait, price then comes down further, and this is the extreme of a pullback that created this high, but even though it's not the highest high or it didn't form the last high, this might be where the momentum came in strongest. So if we get if we finally get a body breaking close below this low, then this will be the supply zone we're looking for. So let's get into the idea behind this, right? So, and this is on the Dow on the daily time frame. Of course, this applies on all time frames, different pairs, whatever, right? But this is the example because this one looks clean to be able to really explain what we're looking for, right? So let me first hide, let's see. What we're going to do is we're going to hide a couple of these so that there's no confusion on the specific zone. And we're going to hide these two. They haven't been tapped yet either, so, right. So this is just basically going over the highest probability, right? This isn't something that's 100% of the time going to work, but it will work a very high percentage of the time. And so that's the idea behind this. So now if we look back here, we have this low, makes this high here. This is a failed attempt to make a higher high. We have to pierce this high to be a higher high, but this is a high in this swing. Right here we have a pullback. This is the extreme of a pullback. This is the last sell to buy before we make this high, right? This wicks that previous higher high. So we have this new high. Then price pulls back one more time. We have sell to buy price action that forms another high. And this is the highest high point that we have before we break structure to the downside, right? So the idea behind this is once we break structure to the downside, you're going to look at this leg and you're going to say, well, where is the ideal point that you want to go into? Maybe this is the extreme, the buy to sell that got engulfing. Here you have a doji candle that gets engulfed. Here you have like an inside bar that gets engulfed, a doji candle. A lot of people might not know where to find the highest quality point of interest. Well, let me give you an idea. So this is the pullback. So this high, we had a pullback. This is the extreme of the pullback that formed a high. So we want to see what happens to the extreme. When this breaks, it has to break with a body. So here we can see that this was a low and it was broken by a wick. And therefore, this is not where the most volume was injected into the market, right? Now, you can go on a different time frame. If we went from the daily to the 4 hour, I'm sure you would find it. But the idea behind this is you shouldn't need to, right? And so this supply zone, although this does get mitigated by the next zone, this isn't going to be the one that is going to hold when we break structure to the downside. Because when we're getting a pullback, that's when we're looking for entry, once we've broken structure to the downside, right? Because prior to that, we were bullish, right? So we don't get a true change of character until this low goes, right? So here, we change character, right? But no body break, right? Then we push lower. Then we have this low. We form a pullback. Now we're going bearish. We fail to make a high. And then we break to the downside. This break is only a wick. So when this extreme of the pullback, this pullback low, forms this lower high, we break to the downside, it's only a wick. And so this doesn't count either, so we're waiting. And so we look to the left. Well, where's there another sell to buy price action for the supply? This was sell to buy, this was sell to buy, right? Then sell, right? And then we have basically this area. In the daily candle, this was the last sell to buy that we had. So does this area, this is the extreme of a pullback on the higher time frame, we do get a body break and close below the extreme here. So to me, this is the valid supply zone. Now, you're going to think, okay, well, this isn't a massive zone, right? But then what I do know is that unlikely is it going to be that in this area here, this is the that we're going to get a mitigation because this area was weak. We broke with the wick, so not really valid in my eyes, right? This area broke with the wick, so not really valid in my eyes, right? Then we have a pullback here, and then this is when we break to the downside. And so the only area that is valid in my eyes will not be in these areas. Now, price can come into this area, right? Now, this might look like it's in that area, but it's not because we have this low to this high, then we break. Then we pull back, right? And here, now all these candles are lower, but then we get an engulfing to the downside and we ended up breaking. And so what we can clearly see is that this is the only one that is not inside these two ranges that did break structure to the downside and is in the valid supply zone. And so to me, this is going to be the zone that I want to target for an entry. That's the higher probability zone, right? And that's where we come back to, right? Now, same thing here. This zone will be a little bit more clean, right? So we have this low. This is the extreme of a pullback. We pull back to the upside. We make this high, and then we continue to the downside, right? So the idea would be here. When we get the first body breaking closure on sell to buy price action, that will be our supply zone, right? So here we sell here. We have a lot of wicks to buy, right? We sell here to buy. We make this lower high. We print a lower high in here. Anyways, what happens is we break structure to the downside. Well, here, what I can see is we don't have any sell to buy price action printed here. We have wicks in here, but we're not using that. We're using actual candles. So this was the last sell candles we saw before we printed this higher high on the swing, if we just counted this as a swing. Even though we know on the higher time frame we're expecting a lower high, this sell to buy formed this internal higher high, right? So when this broke to the downside, what did we get? This is the extreme of the pullback, so we're waiting for this to go. We got a body break and candle body closure here. And so when we see this break, then we know that the supply zone that we're looking for is here. Now, if we were waiting for this specifically, the next tap that we get doesn't tap that, right? Now, it could be tapped later down the line, and it will, right? But now that we know that our supply zone is in this range, what we're looking for is two things. Well, we can have an extreme, and we can always have a decisional. In this case, the decisional is going to be the one that gets tapped, because this is where we have what? Price action on the wicks inside the supply range, right? So we will only use candles for forming the supply zone or the range. And then when we want our point of interest, we can look at wicks, right? So here we have a pause in the market where we have buy to sell wicks that engulfed and broke structure. So in this case, the extreme wasn't the point of interest. It was this. It was the buy to sell wicks that we're engulfing. So this is the point of interest, and we get tapped, right? At the same time, if you use the entire wicks here, you can see that after breaking structure here, we already get a tap, and you can also find an entry from here to break structure to the downside. Now, of course, because let's say if we're ideally continuations, looking for continuations, because this is the extreme of this pullback that formed this lower high, the minimum expectation is that this is going to go, right? And so when this goes, right, we already take profit. Now, same thing, if we look here, how can we look at this zone specifically? Let's leave this here. Now that we have this, is if we look, okay, so we have sell to buy price action, right? Now, there's a lot of candles in here, but we can look a little bit more refined, in more refined ways, right? Here we have sell to buy. We have some selling to some buying. Technically, we have the candles in here, right? And then we also have this extreme, the extreme of the pullback. Because in my eyes, this is the extreme of the pullback. From this high to this extreme pullback that took liquidity, and then we made a higher high. One second. I would basically like to look for something in here, right? Now, because this one could count because it did make a low in this range, we have this high, then we swept liquidity, we could use this too. And so in my eyes, I would look for a point of interest in here. Now, there's a couple points of interest that we could look for. Initially, we could look for, well, the extreme here, right? We have the extreme wicks, of course. So we have this point of interest that we could use. But we could also use the candle body in itself. So we have these two areas that we could look for, right? Now, what you could also do is if you wanted to refine even further, sometimes you could even look at a lower time frame to refine this specific point of interest. And we could get a reaction to anything in there, right? So let's hide that now and then show them all again. So this is what the idea behind this system is. The highest probability supply or demand zone is going to be the one that specifically creates a break and structure with a candle body break and closure on the last sell to buy or buy to sell range. So that's the idea. You want to make sure that it's not broken by a wick, it's not going to count. If it's broken by a wick, it's simply going to be low volume, low momentum. The injection of volume was not specifically in that zone, and so the highest probability area will be when you get the first body candle break and closure. And so while you might say your point of interest is going to look bigger and bigger each time you have to go lower, it will still also increase the probability, because if initially we looked at this one, right, price never came back to that high, right? It's not always going to be the highest point of interest. If we looked at this area here, well, specifically, because this was the wick break low, we'd probably be looking at a point of interest like something like that, and we would also not get tapped. And so realistically, while this point of interest makes sense, we wouldn't recognize it necessarily until we counted this as the supply zone. And this was the only one that was not inside of the ranges that happened, that did cause a break of structure with a candle body break and closure, that the other ones did not. Now, when price is really clean and you get something like this is going to be very easy to find your points of interest. You're pretty much, in 99% of the time, looking for something only inside of that range. Once the break happens, you're not really looking for something that happens after the break. You're looking for it inside, right? Anything that happens on the outside could serve as liquidity for you, right? But you're looking inside of the range. That's usually going to be the highest probability. In some cases, you will get reactions to areas in here, or you will see that this serves as liquidity for the range. But in most cases, you want to find something inside the range as its higher probability. So now let's look at some other examples. Let me pull up some other charts. So here we are on GU. So here's an example. Now, if we look at the higher time frame, we're pretty bearish, right? Now, we did have a change of character, right, that shifted price bullish, right? Now, we don't necessarily know if price is going to remain bullish or not, but we know that the higher time frame is still favoring bearish intentions, right? So temporarily bullish pullback, we don't know what's going to happen. So this is how I would specifically use it in these type of situations, right? Now, if we looked at this range here, right, we could use the same technique, right? Now, we don't really have a body break and closure. And so in my mind, it's not going to necessarily be strong, because here we have buy to sell price action, right? And I don't see any, let's say, buy to sells that get body closures, because technically this is the last buy to sell on the 1 hour time frame. Now, this is the 1 hour time frame. This was the last buy to sell that created this low, right? And there's no more buy to sells in here. Now we're shifting on the pullback. So when we take this high with a wick, to me this doesn't look strong, and it doesn't look like it's going to hold. And we do see that later, right? So in the meantime, what I'm looking for is a supply range or supply zone that gets broken with a body, because that's going to show me some strength, right? And so this is how we would take this. So here I can see that here we have sell to buy price action. So we form this high. Once we break structure to the downside, now I can begin looking in this range. Now, because we don't take this low necessarily right now, right? And we wouldn't necessarily want to be targeting that, because there's a chance that you can also be taken out if price is bullish. So I'm going to show you the higher probability way of doing this with also setting up your targeting, right? Now, this is something that I've been doing specifically more recently on multiple pairs, so I've already been testing this, and it works very well, right? So this is the last sell to buy that makes a high. And so in my mind, on the 1 hour time frame, the only time where we actually have a sell to buy that I can consider, this would be the extreme of that pullback, right? Because we don't have any sell to buy with candles in here, right? Now, inside wicks, we do have sell to buy price action, but I need to see candles on the time frame and doing my analysis, right? So these are sell candles that ended up creating this demand zone that formed this high. So for me, this is the only area that I can look at it on the 1 hour time frame, right? So here is when we get our actual break, and we don't get wicks, we get a full body close. And to me, this shows me that this is a strong range. And so now wherever price pulls back to, right, there's going to be an area where it gives its reversal, right? Where it usually gives a change of character as a pullback before we come into this zone. So because I see that we have a body break and closure here, I can see this is a strong supply zone. Now, I don't want to set a target all the way down here because there's a chance that I can also never get hit to that area. So what I'm going to use as my target is going to be the extreme of the pullback. And so when price starts shifting bullish here, I can see that it's approaching my supply range, my supply zone. So I'm going to mark this as my target. This will be my first target, and this will be the highest probability target. As we know, the supply zone specifically broke structure to the downside, right? And because it specifically broke structure to the downside, right, this is where we have the reversal point from the pullback into the supply zone. So I would require this to be taken if this is going to continue to be strong, even if it only lasts one time, right? Now we can drop to lower time frames, for example, if we wanted to also see more information, right? So for example, here we do have, this was a sell to buy that formed this high. Now internally, we have this area that we could also focus on, right? Let's drop down to, let's say, the 30-minute. On the 30-minute, I can drop, and I like to drop half time frames in this case. For example, so if I'm on the hour, I'll drop to the 30-minute because I can also see very clean price action when I'm having or halving, I guess, the data, right? So here we have this high. So I already know that I can look for anything in this zone. So what I'm looking for now is on a lower time frame where we get a pullback that ends up breaking structure with a candle body breaking closure. So here on the 30 minutes, I can also see if I look for buy to sell price action where we get, sell to buy price action that makes an internal high that then breaks with a body candle closure, right? So for example, here we have a pullback that we're forming and we kind of make this high. Technically, this is the low of this pullback, right? The weak pullback. And if I go here, I can see potentially this would be one zone. So I could potentially look at this, right? And this would be one area that I would, that I would be considering looking for because we got a candle body break and closure below this pullback, right? After that, we're just continuing breaking to the downside. We don't really get any pullbacks. This is just part of the continuation to the downside. We're reacting to the extreme. It doesn't really matter this demand zone because we're looking at this range in general. This is where we get a pullback, right? Now this pullback actually comes in to mitigate this area. So in my eyes, if this area comes back to get tapped, then it would use this as liquidity. So I can kind of refine it a little bit, right? Kind of narrow it down a little bit more, right? But then when I have this pullback, this is the sell to buy that makes this high. I don't see inside here on this any more sell to buys that make highs that get candle body closures. No candle body closure here. This is just one candle, so it doesn't count. This would be the extreme of this pullback, and therefore this one also I can see gets broken with the candle body breaking closure. And so now I know that based on the 1 hour time frame, this range, even though it's pretty big, and this is why it doesn't matter too much, right? This is a range of about 85-ish pips, right? So 85-ish pips is my supply zone. Now I'm having the time frames so that I can find on the lower time frames the specific zone where the liquidity was injected. And so here I can see with great clarity that I have this area here where we have a wick that ended up breaking structure to the downside, right? Body candle closure, so this is valid to me, right? And it did get tapped on the pullback, right? So to me that does make sense. And then I have this one that had not been mitigated yet because once we're pulling back into this range, right, we don't see this yet. This hadn't happened yet. So here I see this is the buy to sell price action that was engulfing, directly broke structure on the 30-minute and contributed to the break of structure on the 1 hour, right? So this would then be my point of interest. And you can see that price comes in and matches those equal highs and respects it. Now, of course, I would prefer to get a lower time frame entry, and maybe I can refine this even better by going to the 15-minute time frame, right? And on the 15-minute time frame, you can see the point of interest is just as clear, right? And this area, for example, this point of interest on the 15-minute doesn't look as clean. All that this really is the unmitigated extreme of this liquidity point of interest. So if price was coming into here, it's just because this is unmitigated. Now this was not an engulfing sell, so to me this is now lower probability. But this area is still a 15-minute buy to sell engulfing. I can kind of cut it down a little bit. Let's focus on the body there. Wicks high is the extreme, right? And when I catch this as my point of interest, I can look on the lower time frame, maybe on the 1-minute time frame, to get a refined entry. But because I know that this is a strong supply zone on the 1 hour, on the 30 minutes I have this area, on the 15 minutes I have this POI specifically, I know that the highest probability chance is that if I set an entry here, whether I set it at the equilibrium, at the high, whatever it is that you're going to be doing for your strategy, for example, let's say even if you just set like 10 pips, whatever, you want to cover the high, you're entering at the EQ, whatever is going to happen, this needs to go, because this is the extreme of a pullback on a strong supply zone. This is a strong supply zone on the 1 hour. This is the furthest point away in the pullback. This pullback is failing to break the supply zone that's already strong, right? And therefore, at the very least, this needs to be swept. And this would be a very high probability type of setup using a range like this, right? And then it doesn't really matter what happens later, right? Now, your TP1, you can have this as a hard TP or take profit 1 and leave some running if you think it's going to get continuations, right? The idea behind this is, let's look at this, right? Now, one thing that I know is if I'm looking here at this range now, what do I not have? This is a low. We have a wick close through here. So this is not going to be the strong range. Maybe I can look for a strong range. I'm looking for the last sell to buy that formed a high, right? So here I can't see any sell candles on this time frame, right? Now we're on the 15-minute, right? I don't see any strong candles that are sell to buy anywhere up here. So technically, the sell to buy range would be, this would be the sell to buy. This would be the extreme, right, of the pullback that formed this high. So technically, I would have to see this low get broken to be valid. And guess what? It's not. It's only broken by a wick. And that tells me that this supply range is weak. And because this is weak, I'm not expecting this to hold. And as you can see, it doesn't hold very long. We have a couple wicks below here, and then price takes the highs and takes this range too. This is your first sign that this is not going to be a supply range that you want to be trading from. Now, doesn't mean you can catch trades on a lower time frame zone in here, but it also just means that technically this low is a low probability of being taken on a pullback, right? Now, let's say, for example, you can see that this low came into the supply here and then did take the low, but it was much lower probability, and it's not going to give you such a high RR trade as you can see that this one would have. You're seeing how long the swing was before the pullback. You can see that this area here caused this low. None of this supply zone is valid, and therefore we don't really have something to compare it against. And obviously the push to the downside, the supply range in this case being weak is 75 pips, and the potential that we would be able to capture from a pullback would only be about 20. So it's not something that we'd even consider. So hopefully that makes sense. Now let me give you another example on a different pair. Alright, so here we are. This is AU, right? So this is the next pair we're looking at. And once again, in this one, we're going to be looking starting from the 1 hour. Now, this works great. Now, if you use it on the 4 hour, absolutely, the 4 hour works great too. It works on all time frames. But you have to find where the cleanest point of interests are going to present themselves, right? Because at the end of the day, we're refining these. So if the 4 hour point of interest is here, right, you're going to have to drop time frames once again to refine it a little bit further. So in that case, I find it easier sometimes to just start on the 1 hour, right? So that's why we're starting on the 1 hour for a lot of these, even though it works on the daily, 4 hour, 1 hour, 15 minute, 5 minute, 1 minute, whatever, right? So let's look at this. So price is bearish, so we're looking for continuation to the downside, right? So in this case, I'm going to give you an example like in the first part of the video where we don't even drop time frames, but then I will do it with lower time frames, right? So here, what do we have? We have this low, we make this high, and then we break structure to the downside. So we have a confirmed break of structure, right? Now, for break of structures, I need to see candle bodies. The way that I do it is if this is a wick, then this wick then has to be broken by a body for it to count. So in my mind, this is a break of structure. It just took a little bit longer, right? So that's how we use it a little bit differently, right? So then I'm looking for the last sell to buy that made a high that ended up breaking structure, right? So if I look at this, this is the extreme high, right? So we have, this is the highest part in the pullback before we continue to the downside to break. So I'm looking for the last sell to buy that made the high. Here I have a sell candle on the 1 hour, right? And it has to be a candle, can't be wicks. This is a sell candle that formed this high. So in my mind, what I need to see is that this gets taken specifically by a body. In this case, I can see that we have a wick. And so for me, that doesn't count as the highest probability zone. I'm going to just mark it with some dots here, right? To me, that doesn't make sense. So what I'm going to look for is, okay, well, is there anything internal in here, right? I do see this is a sell to buy, right? Inside this sell to buy that made that high. And this one does give a body break and close. So here we have this wick. And here we do have the break and close. And so to me, what that shows me is that the extreme of that pullback, let's mark it as red, the extreme of this pullback before continuation to the downside broke structure. So to me, I'm not looking for an entry specifically here for the next supply range, for the next tap. I'm looking for something in this area because this is considered strong. Now, it doesn't mean that price won't come to the extreme. It absolutely can. The extreme is always valid. But what it does mean to me is that my highest probability zone is not going to be that extreme. It's going to be in here. And so if I'm looking at this time frame specifically, well, I can see where is the area where we have either buy to sell engulfing or an area that's buy to sell engulfing wicks that are directly resulting in break of structure. So here I have some wicks that are, we pause, we buy, we form this wick high, then we sell, engulf, and break structure directly. And so to me, this is going to be my area that I'm specifically looking for price to pull back into, because this is inside the range that's strong, right? And so my supply zone ideally would then be this one, right? This would be it. That would be the highest probability zone. Now, if I was starting on a different time frame, then maybe things would be a little bit different. We could start, let's see what the 4 hour would look like. If we use the 4 hour, we could also see, okay, here on this 4 hour, we have, this could be the entire supply range, right? So kind of like I told you, we can narrow down by chopping down some time frames, right? So this is a pretty big zone, right, on the 4 hour. Now price is going to come back into here, right? But just by skipping to the 1 hour, you can see how we can already refine it down to something like this, right? That's pretty clean. So there's no need to go to the higher time frame in this example, because for AU, the 1 hour works pretty well with this, and we can drop time frames, right? Now let's look for the next one, right? We break structure to the downside. So now what we're looking for is, we're looking for what? A lower high and then a lower low. When the lower low prints by breaking and closing below here, right? Let's mark this as a black line. Now, break of structures, to me, if it's a wick break, then the wick has to be broken by the next candle. There we go. So this is break of structure to me. And then what am I looking for? now that we have a break of structure, I can expect a pullback into a supply zone or supply range. I want to know which is the highest probability one. So I'm looking for sell to buy price action that forms a sell to buy price action that is broken by a wick. Sorry, by a body, not a wick. So here, if I'm looking at this area, I don't see any sell candles except for this one. This is the sell to buy that makes a high, right, on this time frame on the 1 hour. And so to me, these wicks are not going to be valid anyway, because not only that, but none of these were broken by a body either, right? So this is a sell candle that printed the new high. So pullback extreme forms that high. So I'm looking to see if this gets broken by a body. So here I can see if I look to the right, it gets broken by a body. So now what I'm looking for as my supply range is going to be anything in this area. Once again, this is kind of how we're just drawing it. This would be my zone. And so now what I'm looking in here is areas that are specifically resulting in break of structures, or areas that are specifically where volume and momentum enter the market, where we have reversals. We always know that extremes are always valid, right? So in this case, we can look, we can drop a couple time frames. We can see that this wick is where we really pushed price lower, but we have a lot of buyers after we tap this demand. And on a lower time frame, we might see things a little bit more clear. So to me, I want to see what caused this. So I will say, for example, in this case, now we can see this already in hindsight, but we already know that the extreme is always going to be valid, and it is inside of this supply range, right? Now, what area specifically gets engulfed? In this case, what we can see is that this candle doesn't get engulfed, but we also know that on a lower time frame, the wicks play an important role. And so here, what we do know that gets engulfed is what? Buy to sell price action inside the wicks that get engulfed. This would be the buy area, and then we engulf to the downside and we close. So I could actually just focus on the top of that wick. And that could be the area that I could be focusing on, because this is basically what we see on a lower time frame, right? We saw something like this, and then we do this, and then that's when we drop, right? And so this is lower time frame inside of the wicks. So form this low, we come up, we make this high, and then we engulf. So there's an order block in here, right? And we could use this one. Now, of course, we'd be patient and we'd be marking out multiple zones. We could look for something like this. We could even narrow this one down and see if price gets into here. This is without dropping time frames. Now we will drop time frames for a couple other examples. We can see a little reaction in there, but doesn't work on the higher time frame. Here, we get some commitment, maybe something in here, right? These wicks here, they have some inducement in here. So this would serve as liquidity, so we can wait for the top of that to get taken. I mean, that could work, right? But the idea behind this is that your point of interest will be somewhere in here. And some of them will be more obvious to where you don't have to drop time frames. Others might require a little bit more than that, right? So now let's look at the next candle, right? Now, obviously, where we have the pullback, we get a pullback into the supply zone in here. So this was the extreme of the pullback, right? So we have this low, this high. Technically, this is all the way at the low. We get reactions in here a couple times that we could take the pullback of the reaction. But because this is where we got the extreme reaction, we can bet that our safe target is going to be this specific low. That's the area we're looking to take, because that's the extreme of the pullback. And so for me, I know that if I'm taking a trade from the extreme, I'm going to want to catch it, whether it's on the seconds time frame or 1 minute. If I set a limit, whatever it is that I'm taking, the first minimum target that I have is for continuation will be for this to go, right? However we're setting that targeting. Now we have the next zone here. So we have this low. This is the pullback that we have, right? And then we break structure to the downside, right? Break structure to the bottom. So now what I'm looking for is the last sell to buy price action that gets closed with a body, right? So in here, this isn't the last sell to buy. We have another sell to buy here, right? And technically, this is the last sell to buy that makes this high, right? Now, the way that I'm going to look at this is where's the extreme low point of this, right? So we have this high. Technically, we formed this extreme of the pullback. Price is messing around in here, but this is the lowest point that makes this high. And so for me, then in that case, what I'm looking for is this lowest point, the extreme, right? From this high to this pullback to this high, then we break. This is where I want to see price. Whoops. I want to see, oh my gosh, what am I doing? Whoops, let's go back. I want to see this broken. So this would be the area that when this breaks, I will begin looking for an entry. Now I can look for a couple different things, right? In this case, I would look for, okay, let's look for some wicks, right? We can see here, we have some wicks, right? We also have the extreme, right? This could count too. Now in this case, we do see that this one does fail. But the idea behind this is a great way to take continuations for as long as you can until they stop working. Because this will help you stop getting into lots of stuck trades or bad trades by not allowing you to specifically get into weak zones, right? So if I look at this, I'm just printing all of them again, right? Let's say if I look at this price action down here, right? We don't know. Price could potentially just dump after doing this and get new lows, right? But what we do see is nowhere in here do we have a candle body breaking closure. We have a sell to buy price action that makes this internal high, right? This one, wicks, doesn't count, right? We have this one here, sell to buy. This is lower in the leg, broken by wicks, no body. This is showing weakness. This is not going to be a strong supply zone. Therefore, I'm not taking a trade off of that, right? And so what we can see as this is kind of giving us an indication of where the highest probability zones are going to be. Not 100%, but it's going to work incredibly well with a lot of accuracy, right? Let me show you another example. So here's another example. This is going to be how we play both sides. Now, there's not too many rules to this. It's pretty flexible. You can find ways to implement this on your strategy. In my case, I'm using this specifically for pro trend continuations. Now, the way I've been backtesting is kind of the way I'm showing you now, right? If we look here, this is my Discord group, and you can see where on GU a while ago, I was using the same strategy. This is where we have a break, right? Inside here, this is on the 4-hour time frame. Then we have to drop to the lower time frames. Here we can kind of narrow it down to where we see the actual break and close. That was the same 15-minute point of interest that we addressed. And then you can kind of see how in the aftermath, price perfectly respected that zone with equal highs, and then took what? The extreme of the reaction that formed, that pushed price back into the supply zone. That's what got taken and swept, right? So the same thing, there's different ways to play this. I'm using it a little bit differently, but just to give you some ways how you can implement this, we're going to look at the 15-minute price action. Now, if you've seen EU, it's been a mess, and so it's very inconsistent, and so you might not want to use this on the lower time frames because it might just confuse you a little bit more. But this is going to show you how to play both sides a little bit, right? So first things here, price is incredibly bearish to the left, right? Here we make a pullback, change of character, but what do? We end up breaking structure to the downside, right? Candle body breaking closure here, right? But what we're looking for is we don't want to just create the biggest supply range or supply zone possible. We want to narrow it down. And so kind of like I was showing before, we want to find the best, the last sell to buy that formed a high, right? That's clean, that got broken with a body. And so here, this is one of the last sell candles that I see before we form this high. Now we have a couple in here that take some liquidity and that could potentially work, right? But considering that this is all after this high was formed, this is the cleanest one that I can pretty much see. Now, what we do know is if we look here to the left, for example, this is where we made a high, we pull back, take liquidity, and then form another high, right? Here, this one is too close into this area here, so I wasn't going to count that one. To me, that one is a little bit too small of a range with those 3 candles for being on a 15-minute time frame, right? So that's not one I'm considering. This next one I could consider, considering it took liquidity from the top, then from the bottom. But here we have a wick break, right? So to me, that's not as quality. Then I look even lower. This is technically the one that does get engulfed and breaks structure to the downside. So now I'm looking at this as my supply range. And so what I want to look for will be, now once we break structure, I want to know that when my pullback happens, what can I expect? Well, technically, this is where we form the pullback extreme, right? So once price begins going bullish and it's heading toward my supply zone, I'm expecting at the minimum that this will be my target if this holds. Now, because this is a strong supply zone, I would expect a reaction to come off of this area. Now I can drop time frames and we can kind of experiment a little bit and see what areas might work better. If we go to the 10-minute, this looks like a clean point of interest. We have a pretty big wick here. Let's see if we can go to the 5-minute. Usually the 5-minute gives really good clarity on the 15-minute points of interest. And so in this case specifically, what I like to see is here, we have a buy to sell that gets engulfed, right? Pushes price lower. So this is the extreme. This is always valid, right? We can see that we made this low. And then let's go like this a little bit on this lower time frame. We can do the same on the 5-minute, right? So here, do we have this pullback? Does it get taken with a candle body? No. Now we're gonna mark it in red anyway, just as we're looking through this, right? So here I can see that this low of the pullback is broken with a wick. So that's not valid to me. So I'm going to look for another pullback. Here we have a pullback, makes an internal high, and then fails, falls to the downside, right? So now I'm looking, where does this break? Technically, this is a sell to buy. This is the extreme. Could this count? To me, no, because the body is just a little bit above. So I might have to look a little bit lower, right? Does this one? Nope, that one doesn't count to me. So that one doesn't necessarily look too clean either. That's a wick. This is technically the extreme here of this pullback. Doesn't look clean. We have another wick. Now if I look to the left, can I see something? Because this is a sell to buy price action. Let's see what happens here. Here we have a break. So on the 5-minute, I can now narrow down that instead of using this entire zone here, I can now focus more on price action here, right? So I can kind of narrow things down. Now in here, we might get some more body breaks somewhere in here. But now I know that in this area, dropping to the lower time frame on the 5-minute, that works. Now, these point of interest would not have worked. As you can see, this was sell to buy wick here, right? This was sell to buy. This was the wick again, right? Too many wicks in here, right? Sell to buy here. This one's fine, right? Now, we already know that this point of interest is valid, but we're looking for more. In this case in particular, we could consider that this was where the 15-minute broke. This is where the 5-minute refined area is going to be. Here's where we have a candle body break and closure. So we know that the strong supply zone is going to come from anything to the right of this, right? So when I'm looking for this, I have the extreme. I have these wick extremes that we know on the lower time frame are stacking of sell orders that end up pushing price lower. Even if this is not engulfing on this time frame, I'm willing to bet we can find it on a lower time frame a little bit better and more clean. We have longer wicks there. Let's see what the 1-minute looks like. Wow, on the 1-minute we can see we swept to the left liquidity. We tapped into this point of interest here. So to me, this is like a supply chain potentially forming if price comes to there. You can see that we have liquidity here before we break to the downside. Now, if I wanted to know if this area was going to hold, I could use lower time frames and I could look at this. Do we have a break here? Well, that looks close. It actually looks like we do have it. We have a small pause here, but the candle body does break here before it pierces, before this pierces it. So it looks like this formed equal lows, but we're taken here. So to me, this does make that area valid, right? Now we also know that like a little bit higher up in here, we could also say like, okay, anything above here would be valid, right? Technically, this is the last sell to buy that made this high. So in here, I really wouldn't use this too much when this would be the pullback. So that works for me, right? So we can get as refined as we want. And the idea behind this is, well, obviously you don't want to over refine your points of interest, but this can really help you understand where your refinements are, right? And so this one's now outside of the POI. And so now what we see is our new supply zone is in here, and we have the extreme, and we have a decisional that can be part of a building up supply chain, right? So price comes in, taps, and on here, if we get a 1 minute confirmation, we might take a trade, or on a seconds time frame. Right here looks like a V-shaped recovery. We know that we have sell to buy here. Candle body break and close here. Might happen too fast for that. We can drop time frames. Doesn't look like we'll be able to see this on the 15 seconds, will we? Looks like we can. Let's go to the 5 seconds. Let's see. Price takes some time to load here. Alright, so what we're looking for is body break and closure, sell to buy price action. This is the low, candle body break and closure, right? Now, if we take off the gap candles, let's see, hold on, I might have to plug in my computer really quick. 1 second. Just gonna switch some plugs here. Alright, so even if we take the no gaps candle thing, we can see that technically we do have body break and close here. We're closed on the body. So I'm looking at what? On the 5 seconds, we'll turn on the gap candle so we can see a little bit more clear. The extreme we know is always valid, but what broke the point of interest, or what broke the sell to buy price action? Technically, this broke, so we could take a trade off of this zone, whether you hit it manual, you hit it at equilibrium, whatever it is. You know that this is a reaction you're getting on the higher time frame. So this is how you use the seconds for this strategy. You want to see body breaking closure. The reason why this works much better is because I've noticed a lot of people, when you're taking trades off of wicks, a lot of times you're going to miss out. And so this will give you a lot more confidence that the valid supply zone is going to be in the range that has the break of closure, the body breaking closure, right? So this would be the range we're looking for. This is the refined point of interest inside that is responsible for breaking it, right? Now, obviously, we could take this trade. How far down? Let's look. Go back to the 5 minute. Let's go here. Now, what are we looking for? Technically, if this supply was going to hold, right, this is a strong supply based on the rules that we use for weak and what makes things weak and strong, right? It broke structure to the downside. Now, this supply zone is strong because we have a body break and closure inside this range. So we refined our point of interest. We've gotten an entry here on the 5 seconds. It's very clean. It's a very obvious setup. So our target will be the minimum, will be the extreme of the pullback, same thing as we did earlier. Even if this is counter to the higher time frame trend or whatever it is, you're going to find that this works incredibly well because we're targeting a liquidation of the extreme that is weak, right? Now, what happens after that doesn't matter. You can take your profits there and be done with that one, right? So let's go back to the 15 minute. So this would be our first trade. That's beautiful. That's about 74R, right? That's pretty incredible. And look, price came to liquidate it before it went bullish. So at the very minimum, this is what needs to happen. It will happen. This is very high probability. This is we're looking at, first of all, we're understanding that this caused a break of structure. Wherever there is a break of structure, there is a strong supply or strong demand zone. We look for the strong supply zone, whereas the last sell to buy that made a high that broke with a candle body closure. We found it on the 15 minute. We refined it to the 5 minute. We found a point of interest that made sense on the 5 minute. It was validated on the 1 minute as well. We took an entry on the 5 seconds. There's 74R in one trade, right? Next thing. Here we have, and we're playing both sides now, right? We have this that makes this low, takes liquidity, right? So we formed an extreme, right? Showing some bearish intentions, but then takes the high. So when we have this happen, what do we have? Technically, this is the high of a pullback, right? So this is the low of the pullback. This is the high of this move to the upside, right? And we form this extreme. So in this case, we're looking for, well, this basically this is the furthest point, was broken by a candle body. So because it's broken by a candle body, this is my 15-minute supply zone. Now I could try to refine it, right? So let's go to, let's say, the lower time frame, right? Where is my bar replay? We're gonna do it like up to here. All right. So what we can do now, right, is once this breaks, what we can begin looking for, we don't know where the extreme is going to be, we can begin to start looking for where price can pull back into. And so on the 5-minute, we have a couple points of interest, right? The extremes are always valid. We see right here that we have sell to buy here. We're pausing in the markets a little bit, but this initiates a push to the upside that then breaks this area here, right? Now, in this case, for example, anything that's inside of this area is valid. Now we can look in this case for buy to sell that's engulfing that gets taken with a break and closure to refine this, right? So same as we did earlier. Let's see, hold on, the thing's not charging once. Okay, so we're back, my system's charging. So now what we're looking for is here to be able to refine this. So in this case, because we're looking at a demand zone, what we're specifically looking for is a buy to sell that breaks to the downside that gets taken, right? So right now, this is the move we're looking for on the 15, right? But on the 5-minute, we can try to narrow it down. So here we have buy to sell. This is the extreme of the buy to sell. Does this get taken with body? It does. The body gets broken here. So we can refine this point of interest a little bit further. Hopefully I'm not confusing you at all, right? And this does make a new low, right? So technically, this is a buy to sell that forms this new low. We don't really have too many buy candles in here that are very clean, right? In this case, we kind of have this area here. It's not too clean because we don't really have a buy to sell range. It's just one quick sweep, right? We could potentially use this, right? If we decided to narrow it down even further. But what we do notice is any point of interest here has already been mitigated next to it. So we're looking for something that's going to be on the right side. So we're looking for anything that's unmitigated. So what we're going to do is we're going to focus on the right side of price action. So what I'm going to do is I'm going to now drag this to anything on this side. So I'm looking for anything on this side. Now these areas, I mean, maybe something could come here and tap, but I'm looking for something a little bit more clean, right? Here I have buy to sell, makes this internal low, takes some liquidity. Doesn't really look the cleanest to me either. I wouldn't necessarily classify this. This is also on a wick, so I'm not looking at this one. This one's wick close, so I'm not looking at that. This one, not looking because it already has been mitigated. So now I'm refining to anything in here, and obviously I'm looking to the right, right? Anything in here that has not been mitigated, right? So I have this area here that looks clean. Price doesn't come into this one. We have, this is basically the extreme. This sweeps liquidity to the left, and maybe on a lower time frame, we could even decide to drop to the 1-minute. Let's see if we can find something on here. All right, this looks pretty clean to me. So on the 1-minute, if we wanted to refine this, we're looking for buy to sell that makes a low internal, right? In this case, that gets taken with a body candle closure. So I'm looking here. If I was going to look here, we know that this area, most of it has been mitigated. We have this wick that hasn't been mitigated. Would this be valid? No, it's broken by a wick, so I'm not looking at that. This is another buy to sell that makes low, right? So here, am I going to be looking at this zone? This is the high of that pullback. To me, it doesn't look good. Let's see this one. Technically, this could also, these wicks potentially could be counting. Nope, closes on a wick, so nothing in here. So now I've narrowed it down that it's nothing here. So now what I'm looking for is, okay, is there something in here? So this is buy to sell, makes a low, right? We have a couple points of interest. We have this, right? Does this close? Nope, that closes on a wick. So I'm not looking at that. So I need to look a little bit lower, right? This, maybe we could count that, but it doesn't look too clean. It's not a buy candle on the 1-minute. I have this buy to sell. Here we get in a buy to sell that gets engulfed, right? We can use the high of this wick. We're going to drag it to the right, and what do we have? Body break and candle closure. So I'm refining it to a 1 minute zone here. And so now what I can say is like, okay, well, what area could this come into? It could come down to these points of interest, because guess what? Well, this could be used as liquidity, but it can also come anywhere within this range, right? Now, if we refine this, if I refined it, the best place that I would prefer price to come into would be anywhere below here, because what this would cause is a sweep of this liquidity and a tap into this actual point of interest, right? Now, without over refining, we can see that it looks like price did exactly that. Now, if we were going to look at that specific 1 minute point of interest, right, it's crazy to think, but maybe price could come in here, right? If we drag this all the way to the right, let's keep it in red just to stand out a little bit. Price really comes into that 1 minute point of interest. This is the pretty much the only extreme strong demand that's refined from a 15 minute to a 5 minute to a 1 minute, based off of that the buy to sell is broken with a close. Isn't that crazy? That's insane. So anyways, we don't take the trade off of this initially because we're, setting limits might be too crazy. We're looking for an entry. Now, whatever entry time frame you use, it might be a little bit different. Let's look on the 5 seconds. I like to use the 5 seconds. Let's use this here. Right now, obviously this is in hindsight, so I'm not trying to show off here like I know what I'm doing too much, but like we're just going based off of what we can see. So in this case, what are we looking for? A demand zone to take a trade off of. So we're looking for a buy to sell get that's taken with a wick. In this case, we're looking as close to the point of interest. Once we get tapped, we get this pullback. We don't have any buys in here. Here we have a buy to sell that forms these equal lows. Look at that. This gets taken with a body, right? So I could look at anything in here to take a trade off of, right? I could see that in here, well, we have some crazy price action in here, but these are wicks. There's some wick price action happening here. This is specifically what is resulting in we have this reaction, form the extreme, and then we break the supply zone. This is a good potential place to enter. Of course, we would maybe look for something here if price came into this area, right? Then price goes long. Right, what do we see? We have a lot of places that we could potentially take trades off of. Oops. So anything in here would have been good. Now, if you were quick, you could have taken a trade off of this point of interest. That would have made sense to me. I would have taken that. If we look to the right here, we would not necessarily get anything here. And on here, we wouldn't really see anything too much. But you get plenty of opportunities to take trades elsewhere. This is where I would like to take my entry off of this flip zone. I would mark it by about at least 2 pips. So 2 pips would cover the low. I'd hit a manual entry on there. Now, in this case, we're looking at the price action on the top side now, because we want to know if this, because we're playing both sides, price action is in a range right now. We're not having a clean pro trend move. So in this case, we're not necessarily sure if we can take out the extreme, right? What do we see here? Here we have a supply zone that is strong. Technically, we have this sell to buy, right? We have this high here. We have some sell candles. We make this wick low, whatever. We break to the upside. Once we come back down, we break and close below this extreme. So to me, this is strong. So now at the same time, I'm considering that this might not hold. So if I'm going to take a trade in this case, I might be conservative. And if I'm refining this area to the 5 minute, same thing. What am I looking for? I'm looking for a strong refinement. So technically, it's sell to buy that makes the extreme high. Does this one count? It does not break. So to me, I'm looking for anything after this high is formed internally, right? Pullback, we have this pullback here, wick, so doesn't work for me. Looking a little bit lower, we have a pullback here. Okay, this works, but it gets swept. So before this point of interest is even formed, this one already got mitigated. So what I'm looking is after that, what happened? This low to this high is the one responsible for the actual break. Did this do anything? Oh, doesn't look too clean. On the 5 minute though, what do I see? Sell to buy price action here. In that case, this point of interest is the last sell candle to the buy. that this one would work on the 5 minute. It looks like it would work. So here now what I'm focusing on is like, okay, well, where did price action accelerate from? I can go to the 1 minute time frame and I can look here. Right now we're skipping a bunch of time frames, but we can still kind of get the idea here, right? We already know that it has to be something in here because what we're looking for is only on the right side. So let's move this to the right side. And it's not going to be anything that's been swept. So if it's going to be up here, which wouldn't make sense because we didn't get the closure on the 5 minute, here would probably be the area we'd focus on. Do we have break here? That's wick. This is wick. Buy to sell price action, or sorry, sell to buy. Sell to buy, here we have the wick, or sorry, the body. So to me that is valid. Pretty aggressive, but valid. Do we have more? We have this here, creates a pullback. Does it break? Somewhat. We might have to go to the seconds time frame to confirm that one. But at the very least, because I know that this is a strong demand, but we have a strong supply, now what I'm expecting to happen is maybe that the strong supply might hold, but if it's going to hold, where is it going to hold from? At the very minimum, this would be a comfortable target for me. Let's see what happens. Let me go to the 5 minute time frame. We want to see what happened. Do we get tapped? Tapped. Perfect. Look at that. Price came to the extreme one, which was aggressive, but the most valid on the 1 minute. But look, we still took profit here, and that was a good trade. So now we already have 73R from one trade, 23R from another trade potentially, right? This all makes sense. So the idea behind this is, and hopefully I'm not just confusing any of you with what you already understand, but the idea behind this is a high probability, not a 100% accuracy way. There's no 100% accuracy. This will be another example here where we form a strong demand, right? Where we give a reaction to the supply zone. But this strong demand that is formed gets what? Taken out. This one doesn't hold. It gives reactions, right? But it doesn't hold. And the reason why is because the supply zone that we just formed is stronger than the demand zone. Well, at the higher time frame is still bearish, the 4 hour. So we can expect that to happen. So I do prefer using this in continuation situations, not so much consolidation, but more in continuations. But the idea behind this is it's very powerful. To understand the basics behind, and if you look at this one again, right, that we want to refine to a point of interest that is the strongest supply or demand zone. We're only focusing on the area where we have a break and closure of an area that's a sell to buy that makes a high, or a buy to sell that makes a low. When that gets taken, the extreme of that pullback gets taken with a body candle closure. That's the area we're looking at. Then what we are doing is we're dropping time frames. We're halving it, 1 hour to 30 minute, then to 15. Then you can use the 5, right? Or 4 hour, you can go to the 2 hour, the 1 hour. The idea with having it is that you have just as much as twice as much data, and so you'll be able to get a more clean POI. Now, in this case, I much prefer using this on the 1 hour than I do on the 4 hour. That's because current price action is a little bit more aggressive than usual, and the 4 hour is just dumping out of the sky, and there's just no way to get in on some of these. There's just no pullback into some of these points of interest. Like if we look at the 4 hour here, look at this. This is the most recent buy to sell, right? On the 4 hour, we have a consolidation we have in here, right? So instead of using this on the 4 hour, which would take forever for you to get a pullback, right? We can potentially use this on the 1 hour, or in this case, I'm using it on the 15, right? And then I'm taking the 15-minute zone, I'm narrowing it down to a 5-minute zone, and then I'm narrowing it down to a 1-minute zone, and that's how I can get confidence that a specific point of interest inside that supply or demand range that's strong is going to hold. And I will trade a reaction off of it. I'm not taking a limit off of it necessarily. I feel more comfortable taking a reaction-based entry, as I always teach. So hopefully this video opens your eyes to seeing price action in a new way. This is incredibly interesting. I did not learn this anywhere else. This is a combination of understanding when break of structure occurs, valid supply and demand ranges, right? And combining both of those things with refined POIs and how I refine things from the 4-hour to the 15-minute to the 1-minute to the seconds, right? It's basically combining all of that stuff. So this is something a little bit more new. There's not set rules on it. So play around with it, see what you think and what your opinion is on this. But I guarantee you this is going to change something for you. So I'm very excited. Let me know what you think. If you want more videos like this, I give mini versions of it in my Discord channel. So join. It's forever free. Links in the description. I hope you have a beautiful and wonderful day. Catch you next time.